Hello, and welcome to the market update for Tuesday, November the 9th. I apologize a little bit ahead of time here. I came down with a little bit of a cold over the weekend, and probably the best time to get a cold with the markets kind of in an area here where it's definitely not where I'd like to get too aggressive. But let's go ahead and dive in and look at this. As far as this may be kind of a short update just because there's probably not a lot we're going to be doing in this type of condition until we can kind of see what's going to happen next. I think Thursday would probably be a little bit more. Well, we'll probably have a better idea of whether we want to jump back into the trend or wait a little bit longer, see if we pull back a little bit further. I did make some decisions in the portfolio on Friday. One of them actually on Thursday, which was ended up being not the greatest decision, but I'll point that out when we get to that segment of the update here. But looking at the direction alerts, again, that's something we've been talking about for a while, but we'll keep pointing it out. We're getting close to that extreme range in all three indicators. Momentum is bumping up there against the extreme area there. Breadth is now starting to catch up a little bit. Obviously, things are probably pulling back a little bit today with the market selling off. But what this is showing me is that we're not at those extreme levels yet. The market still has some room to run. Sentiment is getting real close to the extreme, but it's been high for a long time, even through the pullback we had back in September. And so. So what we're faced with right here is we've got a market that's really stretched in the near term, which we'll look at here in a second on the individual charts, but still has room to run longer term. And it can be a little bit of a dangerous area because you obviously can recognize it still has some room to run, but it's not a good entry point when in the near term it could pull back a little bit. So it really wasn't surprising that we're down a little bit today. I'll point that out when we look at the charts. It was screaming pullback starting on Friday and then confirming that yesterday. And when the market tried to rally a little bit this morning and rolled over, I immediately jumped on that because I knew it was gonna start selling off. But I mean, the price action was telling us that in the near term this is going to probably pull back a little bit. It's been telling us for a little while now. So. The best thing to do in these conditions is to be patient, wait for, because I expect if we sell off right here a little bit, I expect it to be a little bit more of a shallow sell-off. I don't expect a deep, 10% correction or something like that right here. I think we'll get that deeper 10% correction from those overbought or those extreme conditions. And so when you're talking about just expecting a little bit of a brief pullback, you just have to kind of watch the price action. Do you start seeing, well, and to be honest with you, I thought it could be really short because today we started to sell off a little bit. It looked like we were gaining a little momentum to the downside early in the day, and then it recovered. It kind of rallied off the lows a little bit. I was watching carefully to see if maybe buyers were just immediately buying the short dip. I wouldn't like that, though, because we haven't pulled back enough to really alleviate some of the near-term overbought conditions. I'd like to see at least another day where we sell off. That'd make me a little bit more comfortable. But if it does reverse quickly, look out. It's probably going to get very similar to the internet bubble where it gets crazy, where it's people are just afraid of missing out. They're going to buy no matter what. And we're going to probably reach those extreme levels pretty quickly. So, all right, so let's take a look at buy-sell ratios here. We're widening a little bit, but we're not at extreme levels. So, again, that's showing that we could still get a little bit wider there. And it really just reflects what we just saw with those other indicators. there's a question about the stock-specific portfolio. I'll pull up the trade history. It'll get in the. I'm not going to leave it up there very long, just because I've got to go on with the class. But it'll at least get in the recording, so you can review the recording and get the dates of the different activities there. It's same with the watch list. We'll go through the watch list real quick, but I'll probably go through it rather quickly. So just remember, you can always go through it slower, reviewing the recording. All right. Hold on here just a second. All right. So now another thing. Wait, let's go to the sediment indicator here. Again, it's pulled back. It got up close to that extreme level there, and it's pulled back or moved a little bit sideways right here. But again, it still could move up if the market starts taking off again. And I would expect, again, if it takes off, if we only have a 1 or 2 day pullback and immediately starts charging up again, I would imagine we're going to get a pretty extreme level there before it starts pulling back. But again, we're not just looking at one indicator. If this starts to get above that red line and those other indicators get in that extreme range, we start just looking at the different clues and adding them up. We'll start becoming very defensive. I'm already getting more defensive in the portfolio, which I'll go over here in a second. I want to start building more of a cash reserve because I don't want to be caught all long, all exposed if we do have larger correction, because I want all that capital ready to dive back in when we start rallying off of that correction. So, but on the flip side, I don't want to miss out on the last part of the rally, so I'm not going to go completely to cash. But what I'd like to do is be able to, if I'm going to rotate out of positions I'm in, I won't get into new positions until I rotate out of positions I'm already in. Now that might cause me in some cases to, if I see just a stock that's just not participating in any of the rallies, I might just get out and move it into something that looks like it's moving. We've got some of these stocks that have been kind of waiting to break out, and they're just not participating in the rally. I don't know if I want to hold on to them much longer, especially if there's other stocks that are on the move. All right, so let's take a look at this index tab right here. And one thing I've been telling you to keep an eye on is the buy-sell ratios of the different indexes. You get into the double digits, that's it getting into a little bit of extreme level. We only have a few that are in the extreme. Most of those are part of the Dow Transports, or 13-to-1 ratio, which really doesn't get too much larger than that. Well, it can, but I mean, this is a smaller group. So you'll notice that a lot of these that are already in the extreme range are smaller groups. Here's a Dow Industrials at 19-to-1. We don't want to just focus on one group, especially these smaller groups, because they can move into these extreme levels very quickly because there's only a few stocks in them. We do want to keep track of the NASDAQ 100. There's 100 stocks. We're at 5-to-1, so we're still a little ways away from that double digit. S&P 500, but a little over 5-to-1. That's even a broader index. And then, the Russell 2000, almost 6-to-1. But these are still, the broader indexes are still within a range that, they're still not in that extreme double-digit range there. So, again, that's telling me that there still could be some room to run in some of these indexes. Again, that's just confirming, again, what we already saw. But these are important, because what's going to happen is when we do move into that extreme level, what will happen is you'll see the extreme conditions, you'll see the extreme ratios. I mean, all this stuff will be lining up to suggest, hey, we're getting really close to a bigger correction, and that'll be our warning sign to start getting more defensive and start moving more to cash. So, like I said, it may seem repetitive each week that we don't, nothing's new this week, or it hasn't changed much, but we have to keep an eye on it because it can change quickly, and that's when we have to be ready to act. Let's take a look at our individual charts, and I can show you what I was seeing on Friday. Here's the S&P 500. So on Friday, we had this big run up right here, and then we had the the bearish reversal candle right here. How do I know that was a bearish reversal candle? Because we opened higher right here. Here's where we opened, and here's where we closed. So we closed lower than where we opened, but still higher than the day before. So it was showing that the market was up on Friday, but it was misleading because it could not close above where it opened. That's a bearish reversal. You almost always get some sort of a pullback off of that. It doesn't always have to happen immediately, but it's now its context is important here, because it's not any time you see that price action it's bearish. If you see it after a run up in the stock, so we have this run up, and it doesn't have to get extreme necessarily, but you have this run up ahead of it, opens higher, but closes lower for the day, but higher than the day before. It's a red flag that in the near term, this thing could pull back. Now, what happened on Monday was it tried to go higher again. It opened higher, tried to hold it, couldn't, close lower than where it opened. Now, it didn't close, or it did close a little bit higher than the day before. So it was kind of doubling up on what happened on Friday. It didn't do this on some of the other indexes. That's why I paused there for a second. But so we got 2 days in a row where it failed to close higher. That's telling you that there's sellers there. There's people that are selling into that move higher. Now, at all-time highs, you don't have any other past chart data to determine, hey, is selling taking place in this area in the past? But because of that, there's added uncertainty when you're at these all-time highs that it could lead to more selling, but it could shake it off too. I've seen some of these at new all-time highs where it shakes it off and just turns right around and goes higher again. But if it does that, if we were to take today's drop and it immediately starts going back up again, it tells you, that would tell me that there's a mad buy the dip mentality right now, and that I need to be that this is probably going to just get into an extreme level there. It's people are chasing the rally, and they're not, and they don't care that the market's overbought. Now, there's another signal that now I don't care so much about the retail traders as I am about the institutional traders, because when they start chasing, that's when we know that we're really close. And one thing that tells me that the institutional traders aren't just buying no matter what is that the VIX, we had a situation over the last few days. Within the last 5 days, we had 2 days where the VIX was up and the S&P 500 was up. Now, anytime that happens, you want to pay attention, because it tells you that the institutional traders they're buying into the rally, but they're also buying the protection. They're buying those protective puts. They're buying that insurance in case the market drops. That means that they don't quite trust the rally, or they're a little bit concerned about the rally. Now, that's good news. I mentioned in the last update that's happening in this context, because it tells you that they haven't lost their minds yet. Okay, what's really going to cause me to be that's really going to be a screaming red flag is if we get a market rally and the VIX just really drops dramatically from these overbought levels here. If we suddenly turned higher and then you saw a day where the VIX just dropped, what that tells me is that those institutional traders, they hedged right in here because they were a little bit worried, but now that we're going higher, they say, "I'll forget, I'm not spending that extra money to protect my portfolio. I'm just going to go all in." And that's when we could get crazy. But we're not there yet. But I'm just setting the table here in case some of these things start to play out. And by the way, I do that because what I'm looking at is different scenarios, so that when a scenario happens or when something happens, I'm not caught off guard. I've got a game plan. It's not shocking me that something is taking place. I want to look at different expectations of what can happen from almost every area of where the market is. That's what I do sometimes on some of those charts where I'll point out I'll point out like if it breaks above here, or if it breaks below here, I point out those areas so that when it happens, I'm not thinking, well, what's going on here? It's something I've actually prepared for. I'm ready to take advantage of that move. So anyway, that's something that we'll keep an eye on here. We did before we started class, I haven't been able to watch closely while I've been talking here, but we started to slip a little bit further, drop a little bit further as we start class. We'll see how that trades into the close. I think the close is going to be important today. If we close at the lows of the day, especially if we kind of accelerate a little bit into the close, we'll probably go lower tomorrow, or at least open lower tomorrow. If we come off the lows, that's going to create a little bit of uncertainty. Are people buying this dip? Are we going to rally up from here? And that's why I'm saying that we probably won't be doing much today, just because we've got to kind of see how far this pullback could last. Now, if it was a larger pullback, I would immediately look at this previous breakout area and say we pull back to this area right here. But I just don't see that happening right from here. I see something a little bit more like this, maybe another day lower where it's just a quick pullback and then it's off and running again. Maybe something more like this where you have a few days there and then it starts taking off. Not so much a deeper pullback. And that's not a deep pullback, by the way, but relatively speaking, I don't expect that big of a pullback right here. Obviously, it's possible, and sometimes when you're in these overbought conditions, you can have news that comes out that freaks the market out a little bit. But so far, any negative news has really been shaken off by the market. It really hasn't reacted to some of the negative earnings reports or some of the negative news that's been out there lately. Dow, the rest of these charts are pretty much the same, but the Dow didn't. The Dow managed to close higher than the open on Friday, but it also created a little bit of uncertainty with the candle. That's what we call a spinning top. A very compact body. It closed barely higher than where it opened. It had a high up here and a low down here. A lot of indecision. It had its bearish reversal candle yesterday where it opened higher, couldn't go any higher, ended up closing lower for the day, but still higher than on Friday. So again, it's not surprising that it dropped today. So we had on Friday, it was the S&P and the NASDAQ, I believe, that had that bearish reversal. The Russell and the Dow actually closed higher than the open on Friday. And then yesterday we had the Dow with the bearish reversal and the Russell with the bearish reversal. So it became kind of a 2-day reversal event. What that tells me is there's probably a little bit of rotation going on where they were moving into some of the other indexes or stocks within those indexes, but it didn't last. And now the sellers are starting to show themselves today. But again, those warning signs, and that's why I'm saying that the warning sign we got in the S&P, it doesn't always mean it's going to happen immediately. Sometimes it's just telling you we're very close to a near-term top right here. We could pull back within the next few days. You just don't want to be doing a lot of buying on a day like that, especially if you're seeing it on multiple indexes, because you'll probably get a better price if you wait a few days and get a little bit of a market pullback. There's no reason to chase it. At least from a probability standpoint. The Qs, like I said, sometimes it can just reverse those bearish reversals and go higher, but that's a rare event. It doesn't do that very often. So that can be a problem because if you're not disciplined, you can say, well, maybe this is the time it just reverses. I know it's going to just reverse at this time, and so I'm going to go ahead and buy in. And maybe it does, but you chose the lower probability outcome, and chances are if you keep doing that, you're going to be more likely to be on the wrong side of that. It's just usually better to stick with the higher probability outcome, be patient. Usually when I find myself wanting to focus on the lower probability outcome, it's a pretty big warning sign that I'm chasing or that I'm that I'm just not being patient, that I feel like I've got to take advantage of this or I'm not going to get another opportunity. I think it's very important to always remember there's going to be another opportunity. The market is going to give you another chance. And yes, you're going to miss some moves as a result of focusing on, higher probability outcomes. but you're going to get other opportunities. And on the other hand, if you keep chasing lower probability outcomes, you're not going to be around long enough to get another chance. You're going to get blown out of the market before you get that other chance. So I think sometimes we talk ourselves into chasing just because we think, man, we're never going to get another opportunity like this, or this is, we convince ourselves of just that we have to act now when we don't. I mean, I've been doing this a long time, and the market always gives you another opportunity, another chance. And yes, there are conditions that are where it's easier to make money than other conditions. But if you're always chasing the lower probability outcome, you're not going to last long enough to get around to those other opportunities. So here are the cues. You can see we did have that bearish reversal on Friday. It moved a little bit lower yesterday, and then now we're starting to get the drop there today. Same with the Russell. Now the Russell was the one that did move higher on Friday, closed higher than where it opened, but also had a little bit of that spinning top candle formation. Really opened higher yesterday, but reversed. Closed lower than where it opened, but still higher than the day before. And then now this one did come off the lows of the day. Now I don't know if this is the data on these charts is a little bit delayed, and so I don't know if it's currently coming off the lows of the day right there, or if that it doesn't reflect what was happening when I got on, where it's sliding a little bit. It just hasn't shown that yet. I don't know. I'll have to see, but that is something I'll look for at the close. Are we coming off those lows? Are there buyers showing? Because that's telling you there's buyers right there. Now, again, it might be weak buying that rolls over, and it kind of creates that wave B, wave C. Maybe this is wave A. You try to rally tomorrow, and that's wave B, and then you get a flush out move for wave C. Remember that wave B is called a sucker's rally. So that is something to keep an eye on as well, but we'll see how things close there. Now, moving on to the other charts, the bond market. This is something I talked about last week. I think I talked about this on Thursday, that what concerned me about the market rally as well was that we were also seeing the bond market rally, higher highs, higher lows. And what I mentioned was that typically the bond market and the stock market move in the opposite direction. Not always, but typically it does. And I explained the flows that typically when those institutional traders are worried about the market going higher, they'll come out of the market and go into bonds. It's safety of bonds. It's a smaller return, but it's a safer return. And then when they feel like the market's taken off, you'll get a better return in the market, so they'll take the money out of bonds and into the market. So you'll typically see the bond market drop when the market rallies, the bond market rally when the market drops. Well, here we've seen that going in the same direction. But if money is flowing into bonds, as it appears to be doing right now, that's less money that's going into stocks. And so again, when you have an overbought market and there's less money going into the market, and in order to sustain that rally, you have to have new money coming in to push prices higher. That's a warning sign. So we're getting the bearish reversal and we're getting bond market going higher. That tells me that it's not shocking. We're seeing a little bit of resistance here, and a little bit of selling going on in the markets. Now we're getting to a critical level in the bond market right here. Do we break out above this? We are already kind of stretched in the near term. We've had a 3 or 4 day rally right here that's really gone up quickly. That means that bond yields have come down, so you can see we're at this extreme reversal risk. Now, again, you don't have to understand the bond market. You don't have to understand why that's taking place. Sometimes that can get really complex. You hear people talk about reasons why. Just focus on reading the chart. What this tells me is that we're bumping up against a resistance area. We're stretched, overbought. So we probably could get a little bit of a pullback right here, or a little bit of a consolidation. Now, what would tell me that maybe we're going to see the bond market go down? Well, we've got an impulsive move up. Is that followed by an impulsive move down? Do we see a sharp drop, 3 or 4 day drop in bonds? That could tell me that maybe we're in a trend reversal. Then I would look at the next correction. Is the next correction kind of choppier sideways? That's probably more likely that we'll move, it will continue to move lower. So we have this drop down right here. It consolidated a little bit, had impulsive down and then impulsive up. Now this didn't help us too much right here because it really wasn't, it looked kind of more impulsive, but it actually ended up being a corrective move. This was just a pullback for a move higher. Usually that'll be a little bit more choppy, more sideways. We were in this more sideways range. We were talking about how it's probably more likely that bonds go higher from there when it became more apparent that it was a sideways move. What happens if we bump up against here and move sideways a little bit off of this resistance area? That would be more bullish. We would expect that bonds would break out. But anyway, this is something to keep an eye on. Like I said, what we'll keep an eye on this week is this resistance area. Do we break out above there? With the move we've already had, I find it hard to believe we're going to break out above there on this move without consolidating a little bit, but crazier things have happened, so we'll see. But that's the area I'm looking at for this week, is to see if it can break above there. And if not, do we get an impulsive move down? Do we get a sharp sell-off down, or is it more sideways? That's something to keep an eye on as well, as to what the next move in bonds might be. Moving on to gold. Gold has had a little bit of a rally lately, but we're still just bumping up against that key resistance area. We said if it can break out above here, that'd be more bullish. If it breaks down below here, it'd be more bearish. Obviously, the last few times it's hit this area, it sold off right here, it sold off right here. It tried to open right here and then had this big sell-off. Got up there and then dropped right there, started a stair step down. We're back up in here. Is the selling pressure still there? If not, if it can break above there, that would tell me that there are buyers behind this move and that gold could be rallying higher. And that would be significant, especially as many times as we touch this area and pulled back. So keep an eye on that this week and what happens in that area as far as any gold trades that you might be looking at. Oil still looks like it wants to go higher. It looks like it's kind of completed a pullback right here. This looks like an ABC pattern. We had a bullish inside day right here after this sell-off day. We kind of now, we're getting up to this breakout area here now. Sometimes, you think that's the correction, you're going to immediately break out. Sometimes if the correction is going to last longer, it might come up here, try to break out and then come back down. In other words, you might get more of a sideways move. I'm not saying that's going to happen here, but if it fails to break out and then pulls back down again, it would be surprising. Sometimes these corrections can last a little bit longer. Example of that would be just back in here, look like an ABC pattern right here. It caught back up to that resistance area, then rolled back over again. It ended up that this is maybe a larger ABC correction before going higher. But this leads back to, we can't ever know exactly what the market's going to do. If it is going to fail to break out and still stay sideways, you just have to recognize that's what it looks like it's happening, and then adjust our trading accordingly. But overall, it still looks like oil wants to go higher. I don't see any fundamental reason for oil to stop going higher. There's huge demand, not enough supply. OPEC is purposely keeping the supply low to make more money, and so until that changes, we'd assume that, or unless the economy slows down, that would drop demand. But I don't see that happening with everything I'm seeing right now. So the chart is looking like it should go higher. Fundamentals are looking like it should go higher, and until that changes, we'll expect that. The dollar's been a little bit hard to read, because again, what I typically like to see is that impulsive and then corrective, impulsive, corrective. When you get a stock when you get a movement that, was this impulsive, you could make the argument that I was talking about this being a corrective move right here, and then that we're going to go higher, but this hasn't looked real impulsive going upward. we had a little bit of an impulsive move here, a little bit corrective, and then a impulsive move up into here, and then look like we're getting impulsive down. So, I don't want to get too cute with this. We're simply going to draw a line right here and draw a line right here. That was the last higher low and higher high. Where they're going to break to a higher high, or we're going to go to a lower low. A lower low would indicate a possible trend reversal, especially since we've had higher highs, higher lows for the last few months. A breakout above here would say the dollar is still going higher. We're kind of in no man's land right now, and with this harder to read in here, that's what I would probably do, is just stick to the major breakout areas and wait and see what happens there. And then the VIX, you can see the VIX has been rising a little bit here. Not in a big way. It's not spiking in a big way, but just showing a little bit of a defensive measure by the institutional traders. And like I said, if we suddenly rallied and we saw the VIX just plummet, that would tell me that, okay, those institutional traders don't see any reason to hedge, even though the market is overbought. They're not hedging, and that's when you know you're getting close, because that's what creates that panic selling. Why would an institutional trader panic if he's got protection and he feels pretty good about the protection he has? The market's dropping, but those puts are going up in value. What happens is when he no longer feels like he wants to spend that money to buy that insurance, and he's going to make a lot more money as the market rallies. He's going to love in those profits, and then suddenly it drops and he doesn't have the protection. That's when you really start panicking, and that'll start showing up on the VIX. You'll see the VIX spike down, and then you'll get a big sell-off, and the VIX will really spike up in a big way as everyone chases that protection, and they'll have to pay more for it now as the market is dropping. So that's how I'm kind of interpreting that right now. The fact that we're up, the VIX is up a little bit when the market was up a little bit, is actually kind of a good sign that they're still hedging, and that there still could be room to run. They're not panicking, or they're not chasing just yet. Real quickly, we did see a bearish reversal in the chips. Chip stocks have been on a tear. If you haven't noticed, NVIDIA, AMD, crazy moves, but we are finally seeing a bearish reversal candle today. Again, these aren't long-term indicators. I keep pointing that out. They're very short-term, but you can combine them with context that can sometimes create opportunities. This would just suggest there's a very high probability you see a little bit further pullback tomorrow in chips, as long as this holds right here. If it doesn't come way off the lows there. But again, I don't see anything yet that would indicate we're going to see a much bigger pullback in the market, so I don't think that we'll see a bigger pullback in chips. However, if we see the market go higher and chips start selling off, remember the chips sector, reason why we're watching this is it tends to be a leading indicator. So if the chips start suddenly selling off and the NASDAQ 100 keeps going higher, that's a bearish divergence. And that means that maybe a larger correction could be over the horizon there. So, but again, all we're seeing is just a potential pullback right here in an overbought area with an extreme reversal risk. I mean, this is about as if you want a high probability, this is about as high as it gets. You have an extreme level there. It's gone parabolic. It's gone straight up. And then you're getting a bearish reversal candle. Again, assuming that holds into the close, we still have a little bit of time here. It still doesn't mean that chips couldn't go higher, but even if they did go higher, it probably means you're very close to a top. It might have one last ditch effort and then it rolls over. But that's about as strong as it gets. Now, notice that's not absolute. It's not saying it's guaranteed to drop from here, but you can't get that. You won't get that in the markets. It just doesn't happen. But that's about as strong a signal as you're going to get that there could be some weakness tomorrow. And so learn to recognize that. You don't want to be buying chip stocks when you see that type of context. I'm not saying NVIDIA couldn't go higher tomorrow, but that would be the lower probability outcome. And if you're trading those lower probability outcomes, you probably aren't going to last very long. The transports. Now this is interesting because so here they had here was a bearish reversal candle in an overbought. I don't know if they quite got overbought though, did they? Yeah, they weren't in the extreme level there. Despite this run right here, they weren't in the extreme level, but you did get a bearish reversal candle here on Thursday. Friday, again, so it opened up here and it closed down here. And then Friday, it tried to open up here and it closed lower again. Yesterday, it tried to open higher but closed lower again. And then today, it's finally started to drop, although it's come off the lows a little bit. So this is fighting it. But notice, so we had 3 straight days where it couldn't hold the open. But also, again, context is important. Look at a longer-term chart. Where is that taking place? That is taking place right at a previous all-time high. Now, like with everything else, I think we could pull back from here, but I don't think it's going to be a deep pullback. I think we'll probably pull back a little bit and then break out. I still think transfers are going to break out to a new all-time high before we get a bigger pullback in the market. But again, now this is comparing to the Dow. If we suddenly start to see transports really start dropping right here, and the Dow continue to move higher, Dow Industrials move higher, that would be a bearish divergence. The fact that the transports haven't broken out to the all-time high yet, though, is a lagging indication that typically the transports are leading the Dow Industrials. Here in this case, they're lagging a little bit. But that's also why it could mean they're catching up, and we could have a little bit further to rally here. So anyway, that's something to keep an eye on. And then Bitcoin has moved to a new all-time high yesterday, but it looking like it having a little bit of a bearish reversal today. Now in context here, that's not much of a move. That's not a huge move higher. You can see we're not in the extreme reversal risk. So even though we're getting a bearish reversal candle right here, we only really had one day where we moved higher before creating that bearish reversal. I don't know that's a high probability that Bitcoin pulls back off of that. Maybe it opens a little bit lower tomorrow off of that, but it's not an extreme condition. So what I look for usually is a bearish reversal in an extreme kind of condition. That's where the probabilities are pretty high. You get a pullback off of that. That's not, even though that's a bearish reversal candle today, it's not as strong of one. I don't know that I'd be trying to short that necessarily, but it's enough to maybe keep me from, maybe make me a little bit hesitant to buy. Off of that, I might want to wait to see if the buyers show up again, or if it pulls back a little bit further. All right. Now, again, conditions aren't ideal. There's a couple of stocks that we can look at before I get to the portfolio. I'm not going to be doing anything new right now, but are there any patterns that I found? Not a lot. So I'd be very cautious, because usually when conditions are really good, you see a lot of trade opportunities. We haven't seen a lot of great new trade opportunities for the last week or so. And I don't think that's coincidental that we're kind of bumping up against this resistance area, and we're not finding as many new trades. Computer and technology, though, one to keep an eye on here is this, and you'll notice I'm moving down on the list a little bit here too. But this MOSY looks interesting, 94 strength rank. Let's switch this to signals here. And if you look at the context here, the 1-year chart, you had this big sell-off right here, and then you put in a higher low right here. You've gone to a slightly higher high right here, and now you're pulling back again. What I'm looking for is gone back to a hold. Can this go back to a buy and create another higher low? If so, it's acting like an uptrend, and you could even wait for it to break out of this area here. This is a slightly higher high, but you could wait to actually break out above there as a little bit safer entry point. But this looks like it could be working its way back up again. Again, if you want me to draw the old-fashioned kind of bowl-shaped move, it looks like you could be moving up the right side of the bowl, which is what I like to look for. Another one in computer technology is this OPRX 94 strength rank. That's had a couple sell-off days right here, but I'm wondering, I'm looking, is this possibly A, B, C? And then it starts to move higher, or maybe this was the peak and this is just wave A. You get a bounce for wave B and then you get wave C. The key is I don't want it to drop below here. We've got higher highs, higher lows. It's been acting like an uptrend for a while. That's why you'd want to see it start moving up here pretty soon, go back to a buy signal as confirmation, but you'd want to see it put in a higher low first, and then go back to a buy signal, or there's a lot of congestion right there, wait for a breakout. That might be a safer way to go. Now, with stocks that have been in these longer uptrends for a while, at some point they could have a deeper pullback. Could this be the start of a larger ABC? It could, and if that's the case, we probably wouldn't go back to a buy signal. You drop down into here, be hold, stay at hold on a bounce, and then go back to a sell on the wave C coming down, and so we never get that confirmation to jump in. So it didn't hurt us to put it in a watch list or watch it, but we never got the confirmation to get back in. But it also tells you how important it is to kind of wait for that confirmation, at least if you're running this system. Okay, there's other ways to manage your trades, but if you're looking at just more of a simplistic approach, you would wait for that thing to go back to that buy signal. Under the medical sector, so I'm going way down the list here, I found this LXRX 95 strength rank. And this could be in kind of that, so you have this big run up right here. This could have been wave A, wave B, and then you're in wave C. Now, it probably needs to drop a little bit further in wave C. Typically, wave C and wave A will be about the same length, meaning that this move down should be about the same drop as this move down. That would put you probably down in this area right here, because there's a little bit of support there as well. But doesn't have to, and so if this goes, rallies back up, goes back to a buy signal, you can kind of consider that, but I'd definitely wait for confirmation on that and realize there could still be a little bit more downside risk there. All right, let's move on to the portfolio. And so I lightened up a little bit on Friday. I wanted to get a little bit more cash just because I'm starting to see some near-term overbought conditions, and I don't want to be. We're almost back to break even here. I didn't want to be spending. I don't want to be overloaded here at the top and then get a pullback and then have to spend more time trying to get positive again. So I lightened up a little bit. One of the ones I did choose to get out of was Blink. Now, to be fair, they were going to have their earning announcement, and I didn't want to take the chance going into the earning announcement. The way it was behaving beforehand, and actually it reversed today, so maybe that was still a good decision. But we had dropped. We had this run up right here. We had a little bit of a profit, and so we were going to close lower than close below the low of the previous day. That's one of my tighter stops that I'll use sometimes, and I might use on some of these positions we're in. Had the earning announcement, and then had that big move up. That would have definitely put us positive in the portfolio there. But as you can see, it reversed it today. It came right back down. So, maybe that was because if you think about it, why would I get out unless I'm just going to take the profit on that big move, which I might have done? It would have probably pushed it to an extreme reversal risk. But had I waited to see if it went higher, I would have given it almost all of it back on today's drop back down. So, but anyway, if some of you were wondering, thinking that we profited from that, then I didn't. That's what happened. But let me go into let me get the dates here. You can see for the trading history, you can see some of the decisions I made more recently. So at least we made $81 on on Blink when I got out. I also got out of IKNX. Took a little bit of a loss on that one. And I got out of IRIX. That one was a profit, $1,000 profit on that one. We want to take a look at those stocks here. IRIX. We were just, we had this nice breakout move. We're at the extreme reversal risk. I wanted to get some cash. Now, could I have waited for a close below the previous day? I could, but remember, we were seeing that bearish reversal candle on Friday. I was seeing on the SPY. Well, why not just go ahead and cash out of this? Probably a good decision there because it pulled back immediately. And again, we could always get back into this. If it pulls back to that breakout area or something and starts to move back up again, we could always get back in it. So this ended up being a good exit. Maybe Blink was a bad exit. This was a good exit. So you got to pat yourself on the back when you timed it right, and not beat yourself up too much when you timed it wrong. It kind of evens out. Let's see, what was the other one? Was IKNX. IKNX. I think so. This one was just, I was just tired of it lagging. I got out. This was a bad decision because I ended up breaking out. But it was lagging right into here and just kept moving sideways forever. And so I just wanted to get it. So that ended up being a bad decision, although we didn't lose very much. It's only like $300, but I missed that breakout move. But I'm not concerned right now because again, I'm not thinking I'm going to get positive on this cycle of the chart of the indexes. I think I'm waiting for that pullback. I think is coming, and then I'll get in, and that's where I should really do very well is after things have pulled back, have a deeper pullback there, and then start to get back in. If we could get positive just in this final rally up to those extreme levels, great. Now, as you can see here, I've got a good chunk in cash right now, 37,000 roughly. So with the trades I'm in, I'm just kind of, if I want to get into a new trade, I'll probably look for a reason to get out of one of these to move money over. I don't want to be really digging into this cash yet, unless something significant changes. But I want to start building more of a cash position ahead of what I think is going to be a bigger pullback. Some of the oil stocks have been lagging a little bit. Now, oil, as we saw, was trending higher. The USO is trending higher today. It could mean that we see some of these oil stocks start to rally here soon off of that. Let me go through the portfolio scan here, or the portfolio list here. So SBOW, again, we're in kind of this corrective mode right here, but not in an area to stop out. In fact, it recently pulled back to that breakout area, I mean, everything's looking like it should end up going higher from here. I can tell you a reason why it'll go higher tomorrow is if I get out of it right now, then it'll break out. Should I do that for you guys? I'll get out of it, then I'll guarantee it's going to break out tomorrow. All right, TTI is another oil one. Again, pulled back a little bit today or the last couple of days here, but it's still showing, higher highs, higher lows. I guess I could switch this over to signals here so we can see the signals. I still like, though, the way the chart looks. I mean, it's a beautiful bowl-shaped move, and even the inside right here, you can see the higher highs there, and see if that can continue. TELL, again, another oil stock, pulled back a little bit the last couple of days, but still the trend still looks good, and still, again, has that bowl-shaped look to it. Now, I am overloaded in oil, so if oil gets crushed here, that would be not too good. But oil was one of the few charts that really looked bullish still, and so that could be a sign that we get a little bit of an oil rally. If the market continues to move higher, oil rallies with it, and we could maybe do pretty well in the portfolio based off of that. This is in the medical sector, ORMP. A nice move up yesterday. We're getting into the extreme reversal risk. So again, we're down a little bit from the open. Here's where we open. Here's where we are right now. Could I use a close below the low of the previous day as an exit? I could. That would be this low. We'd have to drop below that low, though. That's today's low. So that'd be giving back pretty much all of Monday's move. But I might consider a tighter stop there because we're at the far right side of that extreme reversal risk. I could just get out too. Although this isn't the strongest bearish candle because it did come up the lows of the day, the fact that the market is looking a little bit weaker, I might make a decision to get out of that at the end of the day to block in some of the gains there. Again, the same thing could happen, though, where it just explodes. If the market moves higher, it could just take off. That's the risk. But again, what are the chances of that doing that with it on the far right side of that extreme reversal risk? And even it could be something like Blink where it does go higher, but it comes right back down again to where it probably would have offset it. We'll see. I'll try to make a decision on that at the close. Might be a good chance I get out of that one just to take some profits off the table there and build that cash back up a little bit. AR still in that consolidation range there, but again, I see no reason to. The only reason I might consider getting out of this is if I see a stock that's trending right now, and this is another oil stock, so I've already got oil stocks. This one's been going nowhere. But I see another pattern that really looks like it's taking off. Could I just go ahead and get out of this one and move it into one that could be taken off? Possibly, but I didn't really see any patterns. And again, the market condition right now, I didn't see any reason to do that yet. But if we finish a little bit of a pullback here in the market and it starts to move back up, and this is still moving sideways, don't be surprised if I do something like that. This isn't going to take off. Let's get into something that is. And by the way, I could get out of this, get into something else, and then maybe this starts to break out. And then maybe I get out of one of the other oil stocks and get into this one where it should start taking off the breakout. I could do something like that as well. CPE, this is another one. Now this one I might wait on though because it isn't a bearish candle today. It opened down a little bit, but it's actually trading at a new high right here. I'd probably want to see if this can continue, even though we're at the first right side of that extreme reversal risk. Might give this one another day. See if maybe it opens higher and then closes lower and gives a little bit of a bearish reversal or something like that. It's just barely breaking out. So anyway, I think I'm going to keep that one though, but that's a good move. ASAN, again, this one finally breaking out of its sideways range. That's a good sign, breaking out today. Let's see if this one goes on a run. No reason to get out. It's not an extreme area yet. I think that's it. Yep. You know what, let's go ahead. I'll do it here in class. Let's go ahead and I'm going to go ahead and get out of CPE. Or no, it's not CPE. It was ORMP. Yeah, ORMP. I'll go ahead and get out of that one right now. I don't have to wait till the end of the. Oops, sorry, hit the wrong button there. All right, so let's go ahead and sell. Current price is at $28.97. It'll be a nice $1,700 profit there. That'll be nice. And we're getting closer to that 6% cash, which is good sign there too. All right. As far as the watch list, again, you can kind of see what I have in here if you want, but I'm not looking to enter anything new. So I'll leave this just on the screen here, right here, so you can just check on those. A lot of them we've been in the watch list for a little while, so you can even look at it if you want to go see individual charts of those. I think in last week's market update, I went through the watch list there. I don't have really time to do it here, and like I said, I'm not planning on getting into anything. So, but if you wanted to kind of compare your watch list to this one. And, I might add the ones we did today. I think I'll add those later. MOSY, OPRX, and LXRX. Some of these you can see have already gone back to buy signals, but I just didn't want to add new positions, so I'm not chasing them here. But again, I'm not saying that you could decide to do that. All right, I'll do it for today. Like I said, probably a little bit more. I'm hoping a little bit more clarity on Thursday as to what we might be doing as far as a game plan. But until then, we'll see you Thursday for the stock specific class. Bye, everyone.